look at today is Pfizer, PFE, trading on the New York Stock Exchange. These are the makers of all the drugs, particularly Viagra. And if the amount of email is any indicator on how business is going for Pfizer, then I can tell you that they're definitely undervalued at this point. Okay, the first chart we're looking at here is a 5-year chart with monthly values. Therefore, each one of these candlesticks represents 1 month in time. The first thing I'd like to point out is our simple support and resistance on this chart. As you can see, way back in October of 2006, we had a nice low that was confirmed twice at around 1782. Now let's fast forward to about April of 2008, right in this area, and you can see we had a low of 1684. However, we had a close that looks like about 1725, and we've had a little congestion area right there, and as you can see, we moved back up to 2013 right around the end of August, and here we are in September and October, and we're falling off the face of the earth again. As you can see, though, the interesting thing about this downtrend, this 3-month downtrend that we have, it's forming a hammer candle right here, right on support, which is about 1807 right here with the close of the body. However, with the end of the wick, it matches up nicely with that 1782 resistance level. So it matches up very nicely with that 1782 support area that we have from about 3 years ago. We do have a little upward trend line forming right here, so this definitely does look good. Additionally, we have a well-defined resistance area at 2586. As you can see that it's held up in these two spots really well, so that would definitely be your target sell if you're going to be an investor in this in the long term. You definitely want to take profits and then reinvest back at the bottom. Moving down onto some of the indicators, we'll see that according to the MACD, our histogram bars are increasing and performing a lot better. We have not received a confirmed buy yet by the crossover signal. However, we're working on it. Going down to our money flow index, you can see that the short term is very oversold and it's coming out of oversold conditions. However, the medium length 14 MFI, which is the industry standard, is actually in a pretty solid downtrend, so that's kind of got me worried. But again, like I said, this is a 5-year chart, so it really depends on your investment or trading level. I'm a trader, so I'll be looking more at the short term, but I wanted to point out this nice support level that we had 2 years ago, back in October at 1782, and to show how that thing's still holding. Moving back up to our indicators, it looks like we're getting a little pinch between the PPO and the ADX. However, we're going to have to wait for a little bit before that's confirmed. The RSIs look terrible. And again, this is a monthly chart. So let's take a look at the shorter term version. We're going to go to a daily 3-month chart. Okay, with this chart here, we have a 3-month chart with one candlestick representing one trading day. From our previous slide, we had one candlestick representing an entire month over the course of 3 years. This chart started out fairly well at the beginning of the day. However, it's ended up in pretty bad shape, but we're still going to go over some of the key points that are pretty obvious on this chart. The first being our short-term support area, which I would call about 1765. We had a low today of 1767 4 or 5 days ago, trading days ago. We had 1765. So we're going to see if that holds tomorrow morning in that area. If I see it rebounding off of that line, I'll probably pick up some. But I'm going to be very cautious because I expect to actually test the 1716 area. I'm going to call that a zone rather than a line because back in July, the end of July, we had a 1706 low. So we're looking for kind of a double, maybe triple bottom area right in there. Hopefully get a nice bounce up from there. Once the federal government decides what they're going to do with the bailout plan, I guess, it seems like investor sentiment isn't so good. But I'm definitely going to be looking to sell at the top right here, about 19 bucks. Like I said, I'm a trader. I'm going to wait for it to bounce off of support, and I'm going to ride it all the way back up to resistance, take my 15%, and then move along. As you can see today, we have really heavy volume. We're above average for the last 3 days, which is pretty bad. Our indicators don't look so good. Our rate of change line looks really bad, actually. Our MACD histogram is turned down, and it looks like it's going to cross over the signal line the opposite way. Our full stochastic looks even worse. It's even moving down, and our money flow index is looking pretty bad also. Tomorrow I'll be looking to see if this support area holds. If not, I'll be looking to get in around 1710 in this zone area between 1716 and 1706. If that area holds up pretty well, then I'm going to make a big purchase right there, because at that point we're anticipating all these indicators turning around, and hopefully we'll get ourselves a nice move up. Other than that, everything else looks pretty, normal. You can't even mess with the moving averages or the ADX plus DI or negative DI, because this thing's trading so flat. The RSIs don't look good at all. They're bottoming out, so hopefully we can get a bounce off of the 30 line there for the 14-day. We'll see. But like I said, the best thing to pay attention to on this is just key support and resistance areas. It's the bread and butter of technical analysis. So let's look for these areas to hold, trade without emotion, and sell it right at resistance. Anyhow, have a good day, and thanks for listening. Bye.